Nearly every American wallet is stuffed with credit cards loaded in by flashy promises of 5% cashback and free flights. We swipe now and worry later. Meanwhile, Europeans mostly use debit cards, avoiding debt like last season fashion. So, how did borrowing become our national pastime? Hi, I'm Mike Inishev, and today I'll spill out why Americans are so obsessed with credit cards and who is benefiting from this. Let's go! The history of credit nation. Long before credit scores and algorithms took over, borrowing in America was built on two things: trust and handshake. Back in the 1600s and 1700s, especially in frontier towns where cash were rare, farmers bought everything from seeds to tools on credit, promising to pay after the harvest. No contracts, no interest rates, just a man's word. This was the age of personal debt, where your reputation carried more weight than any number. In tight-knit communities, news traveled fast, and if you didn't pay up, you weren't buying again anytime soon. Even the father of his country wasn't immune. George Washington died with debts equivalent to millions today, mostly from land speculation and lavish Mount Vernon expenses. Turns out, founding a nation doesn't pay well. Early America had almost no banks. The first bank of the United States wasn't chartered until 1791, and even then, most people relied on informal credit. The 1800s were the Wild West of finance. Railroads, canals, and land speculation created fortunes and bankruptcies. The US government borrowed heavily to fund wars and infrastructure, while risky bonds were circulating around the country. And big problems were not long in coming. What am I talking about? Debt bubbles. Just take the panic of 1837 as an example. Banks collapsed like dominoes, millionaires woke up paupers, and what did America do? Yes, we borrowed more, because in America debt isn't a crisis. It's a tradition. The 20th century weaponized consumer culture. The concept buy now, pay later went mainstream. Cars, furniture, radios, all on installment plans. Even Sears sold everything on credit, and banks started offering personal loans. Debt was no longer shameful, it was the American dream's engine. Yeah, there was a little obstacle in the form of the Great Depression, when for people it was hard to buy literally anything. But when everything settled down, the desire to consume has increased with renewed vigor. After the Second World War, America boomed. FHA loans built suburbs. GA credit put refrigerators in every kitchen. Middle-class families bought homes, TVs, and appliances, all on credit. And debt wasn't just normal, it was patriotic. In 1950, the Diners Club card debuted. It allowed executives to wine and dine clients at restaurants and clubs, first in New York and soon around the country. No cash, no problem, just charge it and pay later. But 8 years later, Bank of America suggested a better decision. Why limit magic plastic to rich guys? Let's mail cards to everyone. So the bank sent more than 2 million cards across California in the first few years. But that was just the beginning. The other banks figured out the scheme and started making billions on interest as well. By the 1980s, Reagan-era deregulation turbocharged the industry. No usual lows? Check. Sky-high fees? Check. College kids getting pre-approved cards? Check. Suddenly everyone had plastic. And even despite subprime bubbles in the 90s and 2008 financial crisis, credit cards haven't lost their popularity. Why? Because America's entire economy can no longer exist without borrowing. The US consumer drives 70% of GDP, and credit cards keep that engine running. They are not just plastic, they are progress enablers, letting us book a dream vacation today, launch side hustles tomorrow, and keep business humming even in tough times. Alright, it seems like credits are already part of the American gene, so it's time to figure out what tricks make us spend even more and who we should blame for this. How do credit cards keep us hooked? In today's consumer economy, credit cards aren't just payment tools, They're psychological traps wrapped in velvet. With cashback, travel points, and sign-up bonuses, banks have turned spending into a game where the house always wins. Credit card companies aren't just in the business of moving money, they're in the business of manipulating behavior. Unlike cash, which forces us to physically part with something tangible, plastic numbers the pain of spending. Swiping or tapping triggers a dopamine rush, reinforcing the habit while distancing us from the financial consequences. By offering limited-time bonuses or double points on dining, banks encourage our FOMO. And of course, there are credit scores. For millennials and Gen Z, they have become modern-day report card, one that dictates everything from car loans to job opportunities. Banks know this, which is why they've turned building credit info a mandatory rite of passage. Americans can't resist a good deal, and credit card companies know exactly how to exploit that weakness.
Got a good deal here. A long-term contract with no options.
They dangle shiny rewards like cashback, travel points, and interest-free payment plans, but each comes with carefully hidden traps. For instance, cashback. Flat-rate cards promise 2% back, but only if you never carry a balance. The rotating category cards that promise 5% cashback come with their own headaches. You have to track which retailers qualify each quarter, and the rewards can be completely negated by interest charges if you don't pay your bill in full. In reality, these cashback programs only truly benefit those who never revolve a balance. For everyone else, they are often just an illusion of savings. As for travel points, those tempting 80,000 points for a free flight offers come with string attached, namely spending $4,000 in 3 months. Even if you hit that target, your miles lose value annually. Today's points might get you half as far as they would 10 years ago. And those annual fees, they quietly chip away at any real savings, making these programs truly valuable only for frequent travelers. Here is the reality. Travel points aren't a scam, but they're absolutely a game. One where the airlines and banks constantly move the goalposts. Used strategically, they can unlock incredible trips. But for most people, they are more about the fantasy of free travel than actual savings. And of course, there are buy now, pay later services like Klarna and Affirm, which love flashing their 0% interest promises while the fine print tells a different story. Skip a payment? No worries. That's a $35 late fee plus a credit score hit. Fall too far behind? Congratulations, your flexible payment plan just turned it into a collections nightmare. These services are essentially credit cards in disguise, except even fewer consumer protections and more ways to trip you up. That interest-free loan could end up costing you way more than you bargained for. But you know, if you need to split a $50 purchase into 4 payments, maybe you shouldn't be buying it in the first place. Credit cards are designed to exploit our psychology. Buy now, pay later is cool, until later becomes a nightmare. The average credit card debt for American consumers is over $6,000, and while consumers drown in interest, banks laugh all the way to the bank. And here is how they rig the game. Paying just $25 on a $1,000 balance, you'll be stuck in debt for 12 years paying $1,200 in interest, all while banks profit from your struggle. No wonder they love revolvers, the 45% of cardholders who don't pay in full each month. Or what about that 0% APR for 12 months? A classic trap. The second the promo ends, your rate skyrockets to 30%. And if you miss a payment on any card, other banks can punish you too, hiking rates across the board. Every swipe costs retailers up to 4% in fees, meaning higher prices for everyone, even cash users. So, when you get cash back, you are not actually earning free money. You are just getting a fraction of your own spending back. Yes, credit cards can be deceptive, and yes, they can lead to debt if you let them. But here is the good news. Smart consumers already win at the game. Over half of cardholders pay their balance in full every month, avoiding interest while enjoying perks like fraud protection, cashback, and seamless transactions. Credit cards consistently rank as the most secure, convenient, and widely accepted payment method, far ahead of cash, checks, or even debit cards. The difference between a financial tool and trap: how you use it. So, instead of swearing out plastic, just follow the golden rule. Spend what you have, not what you hope to have. Stay financially savvy and your credit card becomes an asset, not a liability. That's it for today, and if you enjoyed this video, please like it and subscribe, and see you in the next one.